Welcome to the Lunch Hour with Mr. Credit.
That's just a straight shooter with upper management written all over him.
And today, it's Thrive Thursday.
Hey guys, you ready to let the dogs out? What? Do what?
Now, get ready because we're giving you the unique insight to help you thrive in a competitive market.
Join us or die.
And now, the Lunch Hour with Mr. Credit on ESPN Radio 1700.
All right, welcome to a Thrive Thursday. Mr. Credit here, guaranteeing to make you smarter than everyone else. Very special edition of the program today. We have the William McDonald in studio with me today from the McDonald Legal Group. William has been with this program since the very first show. William, it's been a long time, my friend. It's great to have you here.
Thanks for having me.
Yeah, I love talking about this stuff. You know, there's one thing that is completely misunderstood in the world of finance, and that is how the bankruptcy law works, who it's for, who it benefits, and how, you know, some people take advantage of the law. There's no question about that. But how, you know, what's the genuine reason for the existence of the law? I also tell you, and we'll talk about this a little bit later in the program, their short sales are coming back. This is really weird, unexpected. No one saw this coming. We thought, short sales are kind of petered off. Now they're done. Not true. In fact, I personally right now have an offer in to buy a short sale. I didn't get accepted. I'm the backup offer, but they're out there, and they seem to be coming back. And I think that has to do something with the fact that the real estate market has somewhat stalled, kind of had a really big year last year, somewhat stalled, and some people just didn't get all the way back to even, and now they're just kind of throwing in the towel. So the short sale conversation has come back again, and how that relates to bankruptcy, we'll talk about that later. There is definitely a right way to do things with regard to that. Let's start today, William, with kind of the history, I guess, of bankruptcy. You know, why does this code, and this is federal law, okay? This is the law of the land. Why does it exist?
Well, actually, our forefathers, the Constitution provides that Congress has the authority to create bankruptcy laws. So it was our forefathers thought of this, and it was that important to make sure that we don't have so-called debtors' prisons where if you can't pay your bills, and you know you're going to be sent away or something like that. And
let's think about that for just a second. So if we didn't have these laws, then and they weren't in place, or if you just go back a couple hundred years, people would get into debt. They couldn't get out. There's no way out, and they would essentially become a slave to that person who they owed the debt to.
You'd be a slave to your debt, and there'd be no way to get out from under it if you don't have the means to pay it.
Yeah, and let's say you owe someone $100, and all of a sudden you can't pay them. Now you're essentially a slave to that debt. They could, essentially put you in a position where everything you make goes to them.
Exactly.
Every single cent.
Right.
So that's a really important thing. We don't have that today. And bankruptcy is the reason. So continue. I didn't want to interrupt you there.
So really that's so Congress legislates bankruptcy laws, and bankruptcy laws don't change that much. You know, the last major bankruptcy law change was in 2005, and before that it was 20 years before that. So the law is pretty much stagnant. It's not like tax law where it changes, every year. There's all these new tax laws. For bankruptcy law, there can be a few little changes, but for the most part, there's no major overhaul, and which is kind of nice as far as it's a niche practice. So you definitely, if you're looking at filing bankruptcy, you want to go to a bankruptcy attorney. Like you said, it is federal law, so it's going to be the same everywhere in the United States. It's the same law, but there are, as far as some of the issues that come up in bankruptcy, it can be state related. For example, exemptions, you can protect your property, and we look to state law for exemptions to see how much can you protect. And that's based upon state law. And here in California, we can protect a lot of your property. The exemptions are very good.
Yeah, they're very favorable. So we've seen, we have $1 million for retirement accounts. That's huge.
Right.
Just more incentive to sock away your money in your retirement account. You can have up to $1 million and still file for bankruptcy, qualify for bankruptcy, and keep all that money, protect it.
Exactly.
With the exemption.
So you get the fresh start, and you have your assets when you come out for the most part, unless you have a huge asset or something like that.
Right.
And I think I had a client in yesterday. He filed bankruptcy. He was a doctor. He filed in 2008. And I saw him yesterday, and he was just saying, you told me bankruptcy was a financial tool. And he's like, I never thought of it that way. I always thought something bad. I've always been been raised that you never want to file bankruptcy. It's kind of like your Wheel of Fortune analogy, bankrupt.
That's it. Hit the bankruptcy and you lose everything.
And then
you
after
know?
he's doing really well now, he's has money in the savings account, and he's really thrived since then because of the bankruptcy. But he said that was the best thing. Looking back on it, you're really right. It is a financial tool. It's just like having a 401k or an IRA. Those laws that are in place to help you with those financial issues, and bankruptcy is just another tool. So, but it was just good to see somebody where I obviously saw them at their low point, going through all these issues. We helped him out of it, and now he's doing really well.
Yeah,
So.
and you see that all the time. I'm a personal testament to that. I mean, we look at my case, for example, and we can go back to that, where we just basically had a lot of different things going on, but the main, crux, the reason there was, my name was on contracts. I was getting collection letters. I was getting notices to appear in court. Someone was put my name on contracts and obligated me personally. That's one thing that bankruptcy can help with. If you've got a liability out there, whether it's an equipment lease or something like that, it's in your personal name, and all of a sudden these contracts come due, or you have a collection activity or collections in general, bankruptcy is a solution for that.
Yeah, I have two cases right now where my clients, the sole issue is they're on a 4 or 5 year lease, business lease, commercial lease, and they can't get out of it, and they're going out of business, and they're looking at a huge liability there. So they personally guaranteed it, so they're going to have to file personally to get rid of that debt. But thankfully, they can file Chapter 7. There's not going to be any issues there.
Yeah, they file a Chapter 7. They're not going to have a tax issue by filing the bankruptcy. If that debt were forgiven before filing, that would change things, right?
Absolutely. You'd have a cancellation of debt tax income. If you were to settle debt outside of bankruptcy for less than what's owed, then you pay tax on the difference. You'll get a 1099 C for that, for cancellation of debt.
And that's kind of when that really exciting moment turns not so exciting. It's like, oh, I owed them $100,000. They settled for $5,000, and that sounds great, and it sounds like you're off the hook. But now you have $95,000 that goes to the top line of your tax return, and so that's going to be tax liable, like as if you made the money.
As if you earned it, exactly. It's just like you made that money, and there was no withholding.
No withholding.
It's not like when you're making money and you have withholding, and so at the end of the year, it's not so bad if you owe.
Right.
And it's a huge tax hit.
In this particular example, we say $100,000, you settle for $5,000. There's $95,000 of phantom income, as we like to call it, that goes directly to your tax return. And let's say you're at a 33% tax bracket, you're paying over $30,000. You're going to owe over $30,000 to the IRS as a result of that, plus whatever you owe the state, and that you can't do anything about that.
Right.
Once you owe the tax. You owe the tax.
I can't file bankruptcy on that for 3 years.
I was going to say, although there's a nice little piece of the law, and I tell you, this is one that's been really, really helpful. And by the way, we have William McDonald in the studio today from the McDonald Legal Group, been with this program for over 4 years now, since the very first show. He's doing free consultations for listeners this entire time. 800-997-1235 is the toll-free number to get a free consultation with William McDonald. Whether you or someone you know wants to be debt-free, just call 1-800-997-1235. We're going to take some questions, too, in the Ask Mr. Credit inbox. That's at mrcredit.org. So if you have a question for William, email at mrcredit.org, or you can just go to mrcredit.org and email right there in the contact form. This IRS one is huge because this is kind of the cherry on the top. A lot of people will, call in, email, they'll call you directly, and they'll have some other issue. Wage garnishment is a big one. Some people getting sued, the opportunity for them to be in a lawsuit situation where they could lose potentially everything. Things like that will happen, and that'll be the trigger for the call. But then we find out, you have some old tax debt here, and if it fits this criteria, that can also be discharged in the bankruptcy.
That's right. There are some rules, so it isn't as easy as just an unsecured debt like a credit card or a medical bill or even a judgment. But absolutely, if the taxes were due more than 3 years ago and you filed your returns more than 2 years ago and they've been assessed, so there hasn't been a reassessment within the past 180 days, then the taxes are eligible to be discharged through Chapter 7. And so that's really important for the listeners. If a lot of people, when they know they're going to owe taxes, they don't want to file the tax return.
Big mistake.
Because they're scared, to have that bill and have the IRS on them. One, the failure to file penalty is brutal for not filing.
Yes.
So no matter what, you want to file a return. And two, if you can't pay, at least you're starting that 2 years running. So because if for 2 years goes by if you haven't filed your returns, the taxes could be from 10 years ago, but I can't discharge them.
Right.
The other thing is, if you don't file a tax return after 2 or 3 years, the IRS will file one for you. It's called a substitute for return. If the IRS files a substitute for return, you can never discharge the debt. So it's like the death penalty for bankruptcy. So that's why I always implore my clients, please just file the tax returns. Even if you know you're going to owe, it's okay. If you can't afford to send a check, that's fine. We can deal with that, but you need to get the returns filed on for multiple reasons. Yeah,
and I think it's something where the IRS isn't really going to start coming after you. It takes a while for them to really start coming after you, so it is better, even if it's the case that you're going to owe, to go ahead and file those returns so you can get that clock ticking.
Right.
If you only need 2 years since you filed, I mean, there are a lot of people out there right now with a lot of tax debt that fits that criteria. I mean, that's more than 3 years old.
3 years.
More than 3 years old. The returns have been filed in the last 2 years. That debt that is owed, that tax debt that is owed, can actually be cured in a bankruptcy. The same way that a credit card debt would be able to, a lease, payday loans, all these different things that you get that become collections, medical bills, all those things that end up, you owe money, someone's coming after you. Those can all be taken care of, even the tax debt if it fits that criteria. If you or someone you know would like more information about this stuff, or you'd like to get a free consultation with William McDonald, all you have to do is call this toll-free number. It's 800-997-1235. Listen, these laws were created so that you don't have to live a miserable life. I mean, that's what they were really thinking when they were constructing this stuff and making it possible for this to happen. They were thinking, hey, these people got into debt because they didn't know any better and ended up living a miserable existence the rest of their life as a result. That's not right. We should change that. That's what these laws are here for. You don't have to live that way. You can get a fresh start. Get your free consultation with William by calling 800-997-1235. We'll take your questions coming up in just a few minutes. Email at mrcredit.org. We'll be right back. All right, welcome back. Thanks for hanging out. Mr. Credit here. Guaranteeing to make you smarter than everyone else. William McDonald in the studio with me today from the McDonald Legal Group, helping San Diego become debt-free, for 4.5 years on this show alone. Doing that. We've helped so many people, and it's really got to be fulfilling, William. I tell you, there's so many things I can help people with, and one thing I just can't is when someone is laden with debt. When they've got credit card bills up to their ears, they've got upside-down properties, and at that point, I feel totally helpless. So I'm so glad that I have you as a resource to say, hey, there are solutions here. Talk to William. Talk to him. It's a free consultation. He's not going to sell you anything. He's going to explain to you how this stuff works so that you can go and make a decision about what's best for you and your family. Talk to me about the consultation process for most people who are in that situation where they go, okay, I need to talk to someone. I need to see what my options are. They call you. How do they typically feel when they call? And then how do they feel after they've had the chance to speak with you?
Obviously, when they call in, usually the issue has reached a crisis level in the sense that something has probably happened, either a bank levy, wage garnishment, or they were sued, or maybe they just pulled their credit and they've seen all the derogatory, credit collection lines on there to say, I really need to do something. So obviously they're very stressed. They don't know where to turn or what their options are. So they'll set a consultation up. We'll sit down. You'll meet with me always, so you're not going to meet with a paralegal. I know at some firms when you call up and you schedule a consultation, you'll meet with a paralegal, but you'll always meet with me, and we'll go through your circumstances and then determine what's best for you. And maybe, like you said, maybe bankruptcy is not right for you, and I'll let you know that. Maybe it's debt settlement. I do some debt settlement if the circumstances are right. I'm not going to do a debt settlement where you're paying a little bit every month for 5 years.
Not a program.
Not
a
program,
debt
right.
settlement. Yeah.
It's actually, if you have X amount set aside, I can work with your creditors to settle those for less than what's owed. And then we also have Chapter 7, which is definitely the most popular chapter as far as just getting rid of all the debt in 3 months.
I did a Chapter 7. I mean, it's just ripping a Band-Aid off. That's what it is. I mean, just less than 100 days, it's done. All the debts and liabilities are gone. All the stuff that you protected and exempted is still there. And it is really a breath of fresh air. And here's the thing that's interesting. And now it's been a few years now since I filed, but I remember right after the discharge, I got a car loan. And I was in the process of getting a car at that time because we went ahead and just discharged a lease that I had for a really expensive car. Like, may as well just throw this in here. Discharged a lease, boom. And I'd gotten divorced right before that. It was a real mess.
Right.
I mean, it was a real mess.
It's a good year for you.
Let's see. I divorced my business partner. I divorced my wife. I divorced my Toyota and my BMW. Filed Chapter 7, but it was necessary, and we were able to protect what I had. The savings that I had for my daughter and her college fund, we were able to protect all the things I really cared about. We protected the retirement account, we protected. We just got rid of all the bad stuff, And so I think for most people, they get to that situation, you look at it and you go, all right, well, what's the crisis, that you're talking about? It could be a lot of things. It may not just be one thing. It could be a number of things that have all just come to a head and you finally just become overwhelmed. And when you take that step and you go and you learn about your options, it really does give you quite a bit of peace. That Chapter 7, the process of learning about it may only take, an hour or two. Sit down with William. Going through the process really doesn't take a whole lot of your personal time. I mean, you guys do most of the work. And then you just wait until that discharge day comes and boom. So I was going to buy a car at CarMax. And they said, as soon as it discharged, I told them I'm in bankruptcy right now. They said, no problem. The day it discharges, here's the deal we can get you. And it was 9.9% on a used car. It was just a few years old. 9.9%.
Yeah, that's amazing. A lot of my clients that before bankruptcy couldn't even come close to that. I mean, they'd be getting a 20% interest, if anything.
Exactly.
If they could even get a loan.
Exactly. It's crazy. So you have a lot of people out there right now. They have these cars that are worth $5,000. They owe $20,000 on it. They're paying 19% interest because they've rolled over all of this, excess from previous cars and finally got into a situation. They drove a bunch, and that can be a trigger for a lot of people. It's like, hey, what do I do about this?
Sure.
You couple that with some credit card debt and any other potential collections or liabilities out there, and all of a sudden it starts to make sense to really look at this stuff.
Oh yeah, I had a client last night where she came in. Over the past 6 years, she's had 2 cars repossessed because she's going through a divorce, kind of those similar circumstances, and has a lot of little collection accounts. And, we went through her options, do a Chapter 7, get everything cleaned up, went through her credit report. And then when she was done, she's like, oh my gosh, I just feel so much better because I know there's an end in sight and it's not going to take too long. And I can start fresh again. Like, you're 18 on your credit again and start rebuilding.
Exactly.
So.
Yeah, and you'll see once you discharge, you immediately start getting offers in the mail, credit card offers, car loan offers, and that it actually makes sense if you think about it. I mean, if you really sit down and think about it, it makes sense. I mean, who would you rather loan money to? Someone with a bunch of debt who could file bankruptcy any day, or someone who just filed bankruptcy, has no debt, and can't file again for 8 more years? I mean, who would you rather loan money to? The banks figured that out. We'd rather loan money to the people who just filed bankruptcy because we know we got 8 years. We got 8 years to figure stuff out before they can do that again. And the guy who might have a good credit score but has debt, he loses his job. We're not getting paid.
Right.
And so that was too big of a risk for a lot of these people. Listen, if you or anyone is stressed out about debt or want to just see what your options are, you can get a free consultation with William McDonald. Do exactly what I did. Call him. It's toll free. Just mention Mr. Credit when you call. 800-997-1235 is the number. It's a toll-free number. 800-997-1235. And I think that one of the things that we see, William, a lot has to do with credit cards, because the credit cards are they're so absurd, with the way that they treat people, the way they construct their deals, the contract that you're basically signing a contract when you apply for a credit card. I mean, you are in fact signing a contract, and the terms of that contract are typically not very good for you. And in fact, they're ridiculous in some cases. And then when people get to the other side of that initial offer or that catch, and they see, man, I'm paying a really high amount of interest here, and I'm not going to be able to get anywhere on this. That has been a big trigger for a lot of people over, the period of time that credit cards have existed and bankruptcy has been associated. Credit cards have been huge. They a lot of times will first go, okay, I need to get a consolidation loan, or I need to do some sort of consolidation programs. So what I would really like to do is talk about those and just genuinely tell people what they're all about. So there are basically three things that are out there. There are credit card consolidation programs, right? And those are the ones like a lot of times they're nonprofit companies, and they will basically just try to do some negotiation with your creditors and lower your interest rates and put you on some sort of program where you can make hopefully a lower monthly payment and then eventually get it paid off. So you're usually looking at 3-5 years to get it paid off, lower interest rate. You still need to make payments with regard to that. People typically look at that, William, I think, because they want to avoid bankruptcy.
Oh, for sure.
Because they don't understand what it actually entails and how much quicker they can get to the end of the tunnel if they consider it. The debt consolidation programs, I understand, for some people they make sense. The one thing that does not make sense is a debt settlement program. I mean, this is just a joke. It really is. You talk about torpedoing your credit score. I mean, the fastest way to destroy your credit is to do exactly what they do in debt settlement programs.
Right.
We just stop paying your bills. Just stop paying. Stop paying them. And then their thought is that, well, you're going to stop paying the bills, but you're going to pay us. So you have money going out, but you're not getting any credit for that. In fact, your credit score is getting pummeled because you're getting 30-day, 60-day, 90-day lates, eventually collections, and then they're going to settle those things. William, there's a couple of things that are really troublesome about these debt settlement programs, and you deal with a lot of people who go into these programs, pour a bunch of money into it, and then get themselves in a situation where they need to file bankruptcy anyway.
Unfortunately, I see it all the time where people have, and clients have spent 2 years in these programs, and what happens is eventually the creditors can't wait any longer, because with the debt settlement, you're paying a small amount every month into a trust account. And then once that trust account gets a certain level, then they'll actually finally, a year may go by, and then they'll finally reach out to one of the creditors and say, okay, will you take 40 cents on the dollar for this debt? Yes. Okay. So then that one credit card is settled. Well, now you have to wait and build up that pool again so they can go and settle the next credit card. Well, the credit card company at the end of the line is getting impatient, and then they're going to sue the borrower.
Yep.
And that's typically when they come to my office, because they say, I had no idea. I thought this debt settlement program was going to deal with everything. They didn't even have an attorney in the office. They couldn't help me once I got sued. And now here we are facing a lawsuit.
It doesn't protect you from anything.
It doesn't protect you. There's no automatic stay as there is in bankruptcy, which when you file bankruptcy, all collection action stops. And I somehow always fail to really tell our listeners about this, because that's a huge relief.
You're right.
But when you do file for bankruptcy, everything stops: collection actions, repossessions, foreclosures, dunning letters. There can be no collection action, or you can actually sue them as a consumer. So in the debt settlement companies, there's nothing like that. So I see a lot of people that the debt settlement didn't work for them. They've already spent $3,000 or $4,000. 2 years has gone by. They could have filed a Chapter 7 from the outset, have 700 credit, and be debt free. So it is.
You're exactly right. And I want to speak specifically to the credit piece, but I also want to drill down on the automatic stay just real quick. You're absolutely right. These collectors have gotten very tricky about what they do, how they do it, the way that phones are used now, and through voice over IP and all this stuff that's going on, they're able to trick you. One of the things that I've heard a lot lately is that the debt collectors are looking at the area code that they're calling to, and they're using an outbound number that matches the area code they're calling to, which makes people more likely to pick it up. If you see a weird area code, you just ignore it, like that's no one I know. But if you see an area code, a 619, and you don't know it, you go, this could be, was this my child's school or something? I better answer it. And so they're doing that now. They're calling people's work. They'll call your neighbors. They do a lot of these things. They bend and break, frankly, the Fair Debt Collections Practices Act rules all the time. And a lot of people are defenseless to it unless they're willing to go and hire an attorney to go sue somebody over this. The bankruptcy, when you file for bankruptcy, you get what William called the automatic stay. It's called the automatic stay, right?
Yes.
That protects you from all that activity.
It's actually an injunction. So any action taken after that filing date, like I said, is you would have a cause of action to sue them for any damages if they're taking something from you, calling, harassing. All that has to stop.
Yeah, immediately stops. So for people who are experiencing that, Bankruptcy might not only be a solution long-term or medium-term to delete your debts, but also to get your peace of mind back from having to deal with this stuff. If you or anyone you know is going through this, please take the time, give them the information. All you have to do is give them this phone number, tell them to mention Mr. Credit, get the free consultation with William McDonald. It is worth it. 800-997-1235 is the number. It's 800-997-1235. You can check them out online, OurSanDiegoAttorney.com. All right, coming up, we're going to get to some of your questions in the Ask Mr. Credit inbox. And with short sales coming back now, we have to take a look at how short sales and bankruptcy intertwine with one another. Stick around. We'll make you smarter than everyone else. All right, welcome back. Thanks for hanging out. It is your lunch hour. Mr. Credit here. We are live. William McDonald in studio today from the McDonald Legal Group. I see several people have called. Someone's trying to call the Mr. Credit helpline right now. But we're live on the air, so we'll have to get back to you shortly. No problem there. You can always email mrcredit.org. I want to get to an email real quick here, William. This one is from Ron. He writes in, did a short sale in November last year in Illinois. So now the second mortgage company decided to come after me. The amount owed is $61,000. I called them after I was served with the papers, filled out a financial analysis, and offered $3,200 to them. They countered with $42,000. What do you think I should do? File Chapter 13? Also, I could get laid off this fall. I'm in construction. I could then file a Chapter 7. Please give me your thoughts. That's a pretty good question.
Right. Fortunately, we don't have that issue so much in California, because when you do a short sale now here in California, they can't pursue you for any deficiency balance if there's a second or third mortgage.
Yeah, regardless.
So Illinois must still have laws where they can pursue you. We did have that issue before, was it 2010?
Yeah.
So we were seeing a lot of that.
How does this affect him being here in California now, having that property out of state with regard to that debt? I mean, I know it matters where the debt is incurred, right? And it was incurred in the state of Illinois. So is he just going to be kind of at the whims of their law, even though he's a resident here in the state of California? Or
it would be.
Yeah.
So as far as that real estate deal was done in Illinois, so the law would control there where the real estate is.
So he owes the money, but he can use California law to file a Chapter 7 or file bankruptcy, maybe file 13, and delete the debt.
Yeah, if he needed immediate relief and he didn't qualify for Chapter 7, which it sounds like from the email, he could file a Chapter 13 now to stop all the collection action, get some peace of mind. The Chapter 13, you would make monthly payments based upon what he can afford. And the nice thing about the Chapter 13 is if he does lose his job or there's a change of financial circumstance, he could then convert to a 7. But at least he would get immediate relief under the 13 and kind of play it by ear while being protected, as opposed to having that hanging over your head and worrying about it while you're trying to work and
live life.
You
know, they could, because they could sue him and garnish his wages.
Right.
You know, and that would obviously be very painful. Of course, if they do garnish your wages, that's not the end of the road. In fact, if you have a wage garnishment in effect right now, you can file and get relief from that in almost all circumstances, right?
Yes.
And delete the wage garnishment.
Yes.
So, it's never too late with regard to a wage garnishment.
It's a good point. I get that all the time. If they sue me and they have a judgment, is it too late to file? No, it's not. Sometimes there's more work involved if they have a judgment and you have real estate, because they'll have an abstract of judgment that's recorded against your property, which is a lien. And then when you file Chapter 7, it takes away all the personal liability, but then we have to go and file another motion to avoid that abstract judgment lien on your property. Otherwise, you could come out of the Chapter 7. They couldn't pursue you or sue you personally, but that lien would remain on your property if you don't file that motion.
Yeah, and that's big.
That's a big deal.
Yeah, if you have that lien there, that's a totally different situation. You know, Ron, with regard to this, there is some strategy, as you're kind of alluding to here. I mean, if you know you're going to be laid off, being laid off is an opportunity in the world of bankruptcy. Remember,
it is.
Everything's upside down.
Right.
Bad becomes good. Debts become good. It's the same reason why having a housing payment is good, because it helps you qualify for the means test and hopefully a Chapter 7. And so it is a little bit weird, but you've kind of figured that out, Ron. You're right. If you do get laid off at any point in time, or someone who's been laid off and they're considering something like this, then you pretty much automatically qualify for Chapter 7. If you have no income, don't you just automatically qualify for Chapter 7?
You automatically qualify. There is no debt cap limit or debt minimum amount of debt. The only thing we look out for in that situation are assets. What kind of assets do you have that would be possibly at risk to being sold? Again, that's very, very rare, but that's really the analysis. If there is no income, then we're just looking at assets. And then also with Ron, I think, how does he know he doesn't qualify for Chapter 7? I have a lot of people that go on the internet and they try to do the means test themselves, or they read about stuff. You shouldn't do that. You want to see a bankruptcy professional to have them run the means test. It's about a 7-page calculation. There's a lot of ins and outs of it that, unless you're dealing with it every day, you can't really do that analysis yourself. So he may qualify for Chapter 7 unless he saw a bankruptcy attorney that said he didn't. And even then, I've seen that clients come in where they've been told they don't qualify and they do after seeing an attorney. So
yeah, let's be perfectly honest here. Not all attorneys are created equal. I will have to say, and I mean this the bottom of my heart, not only just because I used William McDonald for my personal bankruptcy and going through what I thought at the time was the worst moment of my life, which turned out to be the turning point, and really, really a great story. I consider William McDonald to be the best bankruptcy professional in Southern California. That is my opinion. I believe that wholeheartedly. I've been told that over and over and over by people who I've referred to you, by the professionals out there who have referred people to you. I got nothing but great feedback. And Ron, here's the thing. You don't have to try to go this alone. I know that's how it feels. I know that's how it feels when you're in a situation like this and you go, this is my problem. I have to deal with it. No one's going to help me. That's not true. In fact, that's exactly what McDonald Legal Group is there to do. That's what William McDonald wants to help you do. Be on your team. Help you figure this thing out. Highly recommend you call him and get the free consultation. It's simple. It's just a toll-free number, 800-997-1235. It's 800-997-1235. And I'll tell you what, Ron, you're lucky they didn't accept your offer. Let's say they accept your offer for $3,200 on a $61,000 debt. As soon as they accept that offer, correct me if I'm wrong, Wayne, but the moment they say, yes, we accept it, that's the taxable event.
That's correct.
And so you owe 58 G's.
It's actually a blessing in disguise. You're absolutely right.
Big time.
Yeah.
Because now you're going to take that 58 thou, put it on the top of your tax return, and, working in construction.
He's already making good money, so that's going to be a huge hit.
Huge. I mean, you might end up owing $20,000 to the IRS when that's all said and done. Because there's no deduction that comes along with it.
No.
You're going to need additional. It doesn't help you find additional ways to deduct. There's no offset. So settling stuff like that is actually very dangerous if you do it on your own. And that's why I would highly recommend that you don't. If you want to settle a debt like that, William can do it. It's actually very powerful if you have the money to make an offer, a legitimate offer to them. Usually at least 10 or 15% of the amount owed, at least. A lot of times these debts will get settled for 50% or 40%, sometimes 25%. But if you don't have at least 10 or 15%, it probably isn't going to happen. So if you have that much, you can give it a shot. Believe me, it's very effective when the offer comes on bankruptcy attorney letterhead.
Correct. Definitely helps.
Because the creditor knows, okay, well, he's definitely talking to a bankruptcy attorney. Like, has he considered this yet? Because if it comes from a debt settlement company, they pretty much know. The creditor will know. These guys, they're not telling him about bankruptcy. They're not telling Ron about bankruptcy. In fact, they're telling him bankruptcy is the worst thing in the world. So
not only that the client probably never wants to file bankruptcy, so it's not a risk because they're with a debt settlement company.
Exactly.
So they kind of know that that's the mindset.
So your settlement isn't as good. That's right. Just that's how that works out. When it comes on bankruptcy attorney letterhead, that's how you get the bottom dollar. And that's exactly what we're trying to do for you. You can get your free consultation with William McDonald from the McDonald Legal Group. Do what I did. If you or someone you know is experiencing difficult financial times, you do not have to go it alone. The laws are set up to be in your advantage. You just have to know how they work. 1-800-997-1235 is the number. It's 800-997-1235. Coming up, short sales are back. If you or someone you know is experiencing the situation or about to, I have some good news. There is actually something good that can come from a short sale situation, especially as it relates to your other debts. Stick around. We'll make you smarter than everyone else. Man, time flies when you're having fun. We could do 2 hours today. What do you think, William? Should we tell Ryan and Dave that they don't have a show today, so we can get 2 hours in today?
I know, it always goes by so fast.
I see Ryan back there shaking his head. Ah, goodness. It does go quickly, but what a great opportunity to learn and become smarter than everyone else with regard to something that has so many misconceptions tied to it. Yet so many people have been helped over the past 4+ years that we've been doing this program and educating people about the truth behind bankruptcy, why it was created, why it's there, who it's there to help. I see several people have called. We are doing the show live today, of course, so we will get back to you. You can count on that shortly this afternoon. You will hear from us. And you can feel free to call the number or email at mrcredit.org. The toll-free number is 800-997-1235. So I do want to talk about short sales because this is one thing that it gets really difficult. Keep in mind, there are like 17,000 real estate agents in San Diego, licensed real estate agents in San Diego. And I'll venture out to say that not all of them, maybe the majority of them, do not understand how bankruptcy works in general. Now, especially as how it relates to short sale and foreclosure. And the reason that short sales are coming back, I think a lot of it has to do with the fact that there have been a lot of properties on the books with these banks that have been going through servicing issues, and they finally come to fruition where they say, hey, listen, you haven't paid. It's time to pay, or we got to move on. And also from people who have just, have hung in there. They hung in there through so much downturn. We kind of hit a peak, and then they look at it and they go, gosh, I'm still upside down. We gained 20% last year. We've been on a great run the last few years, and I'm still upside down. I'm just never going to get there, and they're just giving up, tapping out. So I think we need to educate everyone, William, about the key in doing the bankruptcy before the short sale. If anyone tells you to do a short sale before you do the bankruptcy, they do not know what they are talking about. There isn't an instance in which that will make sense for you. Explain, William, why that's the case.
Well, if you know you need to file bankruptcy, then as you were saying, you definitely want to file first. One, because it can help you to qualify. So there's a means test that determines whether or not you can do a Chapter 7, and you get a deduction off your income for any loan that you have secured by property, any secured debt. So I've had clients where they've done a short sale, but they need to file bankruptcy. But because they did the short sale before they filed bankruptcy, they didn't qualify for the Chapter 7, which can be devastating.
Oh, gosh.
Because you're talking about being done in 3 months as opposed to 5 years and paying back a lot of money. So that's a major reason, is just far as for eligibility reasons. Second, when you file a bankruptcy before a short sale, your personal liability on the loan secured by the house is discharged. So you no longer have any liability, and therefore, because it's being discharged through bankruptcy, there is no tax liability for the forgiveness of that debt. So if you do a short sale first and the lender takes $50,000 less than what's owed, as we were saying earlier, that's going to turn into tax debt, cancellation of debt, tax income. And then you file bankruptcy, I can't get rid of that tax debt because of the timing issue.
Not for several years.
Not for several years. So that's another huge reason. Third, I hear all the time from real estate agents, well, you're going to mess up the sale. I can't sell the property if it's in bankruptcy. That is not true. I do it all the time. We just need to file a motion with the court to get court approval to sell the property. It takes about 3 to 4 weeks for me to get an order signed by a bankruptcy judge. At that time,
and that's because of the automatic stay.
Exactly.
That protects you. It's designed to protect you. However, it doesn't have to remain in place if it is harming you. And so what William does is he files he allows or files for a relief from stay. Is that what it's called?
I actually file a motion to approve the short sale because when you file bankruptcy, technically that property is property of the bankruptcy estate until your case is finished. So theoretically, the borrower wouldn't even have title to sell that property until it's released by the bankruptcy estate,
Gotcha.
Which is what that motion does. And the title companies are very aware of this, so they won't, if you don't have that order, it's not going to go through escrow. But they'll get a certified copy of that order, and then you can proceed. So it's not something that where I hear sometimes that, if I do that, it's going to prevent me from short selling the house if I file bankruptcy first. That's not true.
Yeah, absolutely not true. In fact, we've done it dozens and dozens of times, and it is really beneficial for people. Now, the reason, and those are all the reasons why you would want to do the bankruptcy first. There are a lot of reasons why you also would not want to do the short sale first, and the biggest one is the qualification under the Chapter 7 guidelines and qualifying for the means test. You have that liability, whether you're making the payment or not, okay, and that's really key to understand. If you just have the liability, if you owe the mortgage company $3,800 a month, you get to take that and slap it on the means test, which is really helpful when you're trying to qualify. Even if you haven't made the payment for a year or 2 years or 10 years, it doesn't matter.
That's right. I just had a case about 6 months ago where the client had moved out. They hadn't made payments on that mortgage for a long time. They were trying to do the short sale. But because they hadn't sold the property yet, I was able to use that debt as a secured debt, and then you get a rental allowance because they were out of the property.
Wow.
So I got 2 deductions there. Had they sold the property, they would not have qualified for bankruptcy, and it would have been devastating for them.
Wow.
They were talking about a lot of debt.
Yeah.
So it worked out very nicely. And so definitely, as long as you don't have to be making the payments on it, you'll still get credit for it because it is a different type of debt. It's a secured debt.
Yes, agreed. And the thing to really understand here is, yes, not everyone who's filing a bankruptcy needs to short sell their property, and not everyone who's doing a short sale needs to file bankruptcy. But when the two do come together, it's very important that your chronology is correct. And
it's a good time to assess your finances. If you're doing a short sale, what else do I have? What is a bigger picture? Do I have all these credit cards? Do you have $50,000 of credit cards? And you're dealing with a short sale, your credit's probably already beat up. If you're not making mortgage payments, could be a perfect time to file.
Agreed. And that's the reason why it's a good time to assess, mostly because the short sale is going to keep you out of the game for a couple of years. Same cap on the bankruptcy.
Exactly.
So doing the short sale puts you out of the game for 2 years for buying again, and so does bankruptcy. So if you do them simultaneously, you're not adding any additional time in the penalty box to buy a house. You're going to need a couple years to save up a down payment and get yourself in position to buy again anyway. I mean, I think 2 years is probably a little too soon for most people, but the point is that it doesn't make it any worse in that regard. In fact, you are getting the best of all of the worlds that are colliding in that certain situation. So if you are someone you know is going through a short sale and has other financial difficulties, getting a free bankruptcy consultation makes all of the sense in the world. I would highly recommend that you have them call William McDonald with the McDonald Legal Group. You go to ourSanDiegoAttorney.com, or you can have them call this toll-free number, 1-800-997-1235 is the number. It's 800-997-1235. William, really appreciate your time today. Thanks for coming in. It's always great to do a show with you and educate people about this great service. Everyone who called, we will get back to you this afternoon. We're doing the show live today, so we're obviously in studio, but we will get back to you this afternoon and continue to make you smarter than everyone else. Of course, we'll be back again tomorrow at noon for the real estate debate. We'll see you then.